Hello guys, welcome back again. Yassine here. Let's go ahead and continue our educational series. Today I want to talk about technical analysis. I'm not going to go dive to the details, but I want to, like I said before, I'm just trying to help the beginner, the guy who's still intermediate, trying to figure it out, what's going on in the market and all that. All right. So today I want to talk about technical analysis and technical analysis. There is a bunch of stuff in them, including trend lines, tool to draw, support and resistance, and there are patterns, there are candlesticks, there are indicators, there are a bunch of stuff. All right, we'll try to dive in and try to have an idea on each one of them, but we're not going to go to the details. We just want to give you like an idea on what's going on. So usually technical analysis, like I mentioned in here today, they are tools to use in your advantage to know what's going on in the market by using a bunch of stuff. You can use channels, you can use support and resistance and other stuff, and just to tell you where the market is going. Is the market bullish? Is the market bearish? The first one I want to talk about is trend lines. Trend lines, as you know, trend lines, they can go, they can be higher trend lines, bullish trend lines, and you can actually draw descending trend lines. And what I mean by that is, if you have a trend that it's going up like that, this is what I call a trend line by a definition of higher highs and higher lows. Might be, like I said before, it might be easy for you to know that the definition of a trend, but like I said before in my previous video, you really have to identify these on a chart. So if you see a chart like that, that indicates that the chart is going up on to the upside, then you can actually use some moving average to see where the stock is going. Sometimes you will see, like a moving average of the 20, like riding above, like it will be candlesticks like that, and then you will have the 20 MA here, and then you will have the 50 simple moving average like on the bottom of that, and then you will see that the 200, the trend line like that. So when you see them, when you see the 20 below the price, and then below that is going to be the 50, so that's an indication that the trend is going higher. If you see let's get a new one here. When you see a trend that it's going up like that, making lower highs, so this is lower highs, and this is lower low. So we have a low, and this is lower low, and then sometimes you just have them sometimes going just sideways and not doing anything, and then continuing like that. So they will be this is where the trend are going down. So and then again, you will be at this time on the moving averages, you will have the moving averages above the price. So this will be actually the 20, and then this will be the 50, and then the 200 will be on the top. See, it will be the other way around. So I'm just trying to give you here a general idea. So this actually will be the stock. These will be the price, candlesticks, whatever you use, a line, whatever, and then the price will be below the moving averages. All right, below the MA. Like I said before, I didn't find nobody to tell me what is this and what is that, how the price should act when the trend is lower, and I just all I knew before, just I need to find a hot stock and I need to buy it, I need to make money. That's all. I didn't know that there is so many stuff on technical analysis that I have to combine and put them in my advantage to come up with a good buying point. All right, so this is as far as concerned the trend. Another thing I want to talk about is support and resistance. So let me put it in here. Let's put that in the text so I can tell you what we're talking about. Support resistance, as I mentioned before, you can put them in a chart in a different time frame. If you want to identify support resistance, if you can go back to one of my videos, I said put your chart back in the weekly and the monthly and just connect the dots, and they'll be easy to identify. You just connect the dots. Let's say I'm going to give you an example here. What am I looking at? Let's go, for example, look at Apple. You can see here I already drew some of the before when I was looking at the chart a long time ago. Let's go back to the monthly here. Monthly. You can see sometimes a support resistance. They don't have to be. Usually they will look like that, and you will see the chart. You will see that the stock just could be going up and down in a range like that, and sometimes they will be like this, going like a descending triangle, like a trending lower. So you will have price here and price here. This will be the highs, and this will be a lower highs, and this will be actually a low, and this will be a lower low, and this will be a lower low. So you know that we're trending lower. So this is what I said before. Go ahead and try to practice on the chart itself. It doesn't mean that you already know what definition of a trend. We have to really know in the chart, so it will be easy on you. So yeah, support and resistance. Go back in the monthly, try to draw and practice, and then from there you just jump into the pattern. Next thing I want to talk about is actually I want to talk about candlesticks. Let's talk about a little bit of candlesticks. I just want to give you an idea what candlesticks, and I usually use candlesticks. Some people, they use different stuff. They use lines and they use a bunch of stuff. Candlesticks, let's see. Yeah, I just want to give you an example. I'm not, like I said before, I'm not going to dive into the details. Candlesticks, they look like that right in here. So you have a green day base. You can color it to whatever color you like. They might have a wick. The low, this is called a wick, and this is called a wick. This is the high of the candle, and this is the low of the candle. If you have a day that the stock, let's say the stock XYZ closed at $10. Today is green because today closed higher than the previous day before. So let's say the day here was like $9.55, and today is like $10, or it can be just like 1 cent above it, and then the color of that next day will be green. So and the price, you gotta ask me about those wicks. So actually the stock will open right in here, and then it will push. It might go down a little bit, and then after that it will push all the way up higher, and it will close up here, and then you're gonna have a candle that looks like that. So the open here and the close up here, that's a green candlestick. It's a positive day basically. And then when you look at the red day, it's similar. The only difference is, like, you can notice here the open and the close. So instead of opening, the open was back here, right in this area here, it will be actually, the open will be here, and the stock will close all the way, might go up a little bit, and then the close will be there. So this will be the close, and this will be the open, and then you might have a candle like that. It's gonna be a red candle, green candle. Sometimes you have to check the price. Sometimes what you can have, sometimes you will have a green candle, and actually the price will open way up here. Let's say we have a candle here, right? A candle that looks like that, for example, and then next day it will open way up here, right? And then they will drive the price all the way down. And since the close is down here for this candle, because it's a green, let's say this candle is green, and then this one the next day will close actually down here. For me, that's weakness. We'll dive in down when I start explaining stock. We're gonna actually talk about charts and analyze some of the chart, and we'll talk about it. So you will have the open here, right, and then the close down here. We're like, whoa, this is should be a red candle. Yes, but it was actually this day was a weakness in the stock, and it would open here, but it closed, but still closed higher than this stock. Let's say this day we opened at $10, and here we just gonna closed at I don't know, like $10.50 for example. And then you might have a wick, may not have a wick, but just for me, this will look like, this will indicate that there is a weakness. Because if we open this to the, if you open the chart and look at it on intraday, on the hourly or 15 minutes, whatever, it may look like that. And it closed down here because we had a gap here, so that candle will look like this. So he opened here, but he closed here, down here. That's weakness for me as far as I'm concerned. But it still will be green day. It will look green because it closed higher than the previous day. So I just want to give you that tips over there. So yeah, this is a candlestick, and there is a bunch of candlesticks that you don't have to really know all of them. As far as I'm concerned, let's see, some of the candlesticks that you can just Google it in here, and then you will find a bunch of stuff here. What each one means. Let's say, for example, the one sometimes I pay attention the most is it will be a candlestick that looks like a hammer. So the stock will open here, and then the bulls will push the price all the way up high, and it will close right in here. They call that a hammer. I mean, there's a bunch of names for these candlesticks. You call that a hammer. For me, that's a positive candle, because the bulls, they defend the price and they push the price all the way up high. Especially if you have a stock that it was trending lower, and all of a sudden it opened down here, and by the end of the day, the bull they pushed it all the way up here and they closed it. It could mean a reversal too. So you just have to know your candlestick at the beginning, and then you put all of them together, and then it could be a reversal, but it might keep going down. You always want to have that flexible mind. We'll talk about that later. The same candlestick that I just mentioned here, it can actually, the stock can open, the stock will be trending higher, and all of a sudden it'll open up here, and the bear will push the price, and it will look like that, and it will close down here. That's a negative candle, because the bears they pushed the price, and the bulls they couldn't hold it, and it could mean a reversal as well. So just I'm not going too deep in a price action here. I'm just giving you an idea, and for me what I'm looking at the most. If you have a green candle like that, that's a bullish candle. A green candle. That shows you that the bulls are pushing the price higher, like candles like that. These are bullish candles, and same thing for the others. Another one that you can see these candles right in here. Most bullish, second bull. I don't really pay attention to this stuff. You just have to know the action. We have to combine them with the chart and what it's telling you. You have to put it in context. Like I said, do your own due diligence, get as much information as you can, and then it's going to take time. I'm not going to lie to you. It's going to take time to put all this stuff together. You just bear with it. The more you look at the chart, the more questions you ask, the more it's gonna, one day that light bulb is gonna went off, and then they're gonna be like, oh, okay, that's what it means. For me, I like to see sometimes on the stock what I'm trading. I like to see bullish engulfing. Engulfing means you just you have a red candle, and then next day this candle will engulf it. It means that it's trading above the high and the low of that previous candle. It engulfs it. It means this could really mean if this one's green, sometimes I lean to more that the stock it wants to reverse higher, or it wants to push back. If this one is green and this one is red, it will mean the other way around. Let me see if I can find some examples in here. So this one will be a bullish engulfing candle, bullish pattern where there's a lot of momentum in favor of price rising, and this one will be the reverse. It will be the other way around. except this one actually didn't open up here. You can see I call it engulfing actually for me when you have a candle like that, and the next day this one actually will open down here on the low, but it will close way up here. If I see that, I like those the top of candles when I trade. Like I said, go to Google and just deep dive little by little, and don't get too much complicated on the candlestick. They don't predict nothing. They just show you what happened that day. It's like a fight between the bulls and the bears. All right, let's move on. I don't want to make this video too long. Next one I want to talk about is let's put this one, new one. Next I want to talk about is charts pattern. I think I mentioned that before. There's a bunch of patterns before, and chart patterns, they can tell you a story either of a strength or weakness, and then you can use that again to your advantage to exit or enter. There is an ascending triangle, descending triangle, there is a flag, there is a head and shoulders, and then reversal head and shoulders. Let's discuss some of them here. Yeah, again, you can go back to Google and then you'll find a bunch of them. Start with the very basic one, get your eyes trained on the real chart, and then move on. How long it's going to take, it depends on how many hours you put in. First one, I said before, you have you can have an ascending triangle. So you might have a chart that looks like that, and then you will find candlesticks go like that, and then it's actually making what it's trending higher. So you will have a trend. So again, see, you have a higher lows. See, we just talked about that. Now we're using it into a chart. This is why it's very important to know all these technical analysis, because they come into one thing. You know, once you start understanding what the trend, what the support and resistance, what is that, and then what with the moving averages and all that, you will put them in all the chart, and then they'll start making sense. So this is called the ascending triangle. Sometimes when you see, you expect the stock to break in here and then to move higher. That doesn't mean this. If you see this, always the stock is gonna close and go above higher. It might break here, so you always want to be flexible. And this is actually what I want you guys to make attention to. Always have that flexible mind, no matter how much you know in technical analysis, no matter how much you know in fundamentals. You always want to keep that flexible mind, because anything can happen. Anything can happen. We have an ascending triangle and you have a descending triangle that look like that. You're gonna have the chart goes like that. I'm bad at drawing, you just bear with me. These are candlesticks. So you have lower highs. All right, so this high here will be higher than this one. This one will be actually lower than this, and this will be lower than that. Sometimes when you see the action like that, you expect the stock to break lower. I think last time I saw this was in let me check. It was actually on a Bitcoin. Let me see, bear with me here. It was actually here, right in here. You see it. So like that. So you have a stock that you have a high here, then you have lower highs, and then lower highs. So this high is lower than this high, and this high is lower than this high, and this high and this low is lower than this low, and this low is lower than this low. And then you see the stock price action started getting contracted. This is getting tighter and tighter and tighter. So when you see that, you expect, you think, you kind of lean to that the stock wants to break down, right? But you always want to keep in mind that, hey, it might flip and reverse and go back to the other side. So here it did actually broke to the downside. You see that? And then it just keeps going down. For a while, it found the base and then it reversed. See, sometimes, like for me back in time, I would think, oh man, the stock has to just digest here, and then I'll just keep watching it. You know, back time I used to have biases a lot. That's why I'm like, confirming to you guys, like, you don't want to have that bias too much, because the stock can change. It can do anything at any time. So for me, if you would ask me like a couple of years ago, you will tell me, oh, what is the stock is hitting? I'm like, yo, this stock has to break down. No, it doesn't. It's going to break down based on the trend down here. No, it can always go up. You can always make another base and then flip to the other side. Once it breaks above that point here, there's a higher chance. And actually, that's what happened. And sometimes I will just stay in the lane of like, no, why does stock reverse? Stock reverse because he wants to reverse. So you're not controlling where the stock is going. You're controlling how much you're losing. We'll talk about that down the road. All I want you guys now, just keep in mind, no matter how much you know in technicals, no matter how much you know in fundamentals, keep that flexible mind. Anything can happen. That's why you're protecting your capitals. So yeah, so that's what I wanted to show you. Next thing I want to talk about is, we talked about chart patterns, flag. Oh yeah, let's talk about flags. Flags, so we talk about ascending triangle, descending triangle. Stock flag will be basically look like a flag. So the stock will be just trending higher, candlesticks like that, and then it will be down. All of a sudden it will be like that, and then it will go sideways. Price action will go sideways, and sometimes it will digest. That's why so you see me sometimes when it's like putting it like a flag. And this flag, if I see that, I'll anticipate that stock wants to break higher. Sometimes it will be the other way around. Sometimes stock will drop and it will just go sideways this way. It is taking time to digest those gains. Here it's taking time as a digestion mode. Sometimes it will be the price action, the action that's to be digested. So the stock will break down and then will go way up here. It will challenge sometimes the high of the previous candle, and then it will flip. So you will have E to B, B to C, C to D. All right. So same way you have a flag here, you can have a flag this way. And it comes in many forms. It comes many forms and ways. So it can come. So the stock, once it drops, it can digest this way. It might go up this way and digest. It can be that. It can be anyway, and it will still be correct. But again, if I'm always keeping in mind, hey, if the high of that breakdown candle get challenged and the stock broke above it, this becomes invalid. All right, so this is how you read tapes. This is not, I'm not going to discuss this now, but I will discuss it later. But I'm just giving you a hint and sometimes what I look at. What else? Head and shoulder. Let's get a new one. Head and shoulder. You will see again like that. Stock will behave like this. It's not going to be almost perfect like that. Sometimes it will be like this, trending higher. All right, and then you just put a trend like that, and it will break down here. Again, when a stock, it's making head, and this is a shoulder. This will be actually the right shoulder. That will be the lower shoulder, left shoulder. If the stock breaks, many stock analysts will anticipate that the stock will go lower, and then sometimes they will calculate how much the high and the low of this distance here, and then they will put it down here as a target. So here will be the target. All right, so this is head and shoulder. You got reverse head and shoulder, so the stock will be like that. So this one actually will be bullish, and you have a trend here. So you got, this is the right head, and this is left shoulder. I'm sorry, this is right shoulder, left shoulder, and this is going to be the head. And once the stock breaks up here, they will most of the traders will anticipate that the stock will break up higher. It might come down here, retest, and then go back up, and then sometimes it will do the same thing here as a target. They will calculate the distance between there and there, and they put it up here, and then they will see the first target. I don't do that most of the time. Sometimes I do that just for fun. I don't want to see where the stock is going, but you never know. You don't know where the stock is going, so no, you can't. Nobody. That's future. All right. So that's why when I get into a stock, sometimes if in a break, I mean, I might take some partial profit here, but I always want to ride that winner. And that's what that's what I was swing trade, and I like that momentum. Last thing I want to talk about is indicators. Let's see, text here. Indicators. Indicators, they are lagging indicators. They don't predict anything as far as I'm concerned. I use moving averages, like I said here in my chart. Mainly I use the 2150 just to help me sometimes get into the stock or get out of the stock. I use the 8 exponential, I use the 21 exponential, I use the 50 MA. I don't depend on them. I read the tape. I like the price action. I try to analyze the price action. And still, even if you know how to read the tape, and then even if you're good at it, it's still, you always want to have that flexible mind, because anything can change just like that. And if you go back and Google, sometimes you will find that these moving averages are based on the total of the open and the close of the candlestick divided by the day of your preference. Like for me here, I have the 8 moving averages, so it will be like for example, this candle here will be the high of that candle, whatever candle you want. So it will be the high of this candle here, and the close divided by the day of your of your whatever day the day you like, the 21, the 8. And then if you notice here, the close, if I have the 8, it will be closer actually to the price. If I have the 21, it will be a little bit away from it. If I have the 50, it will be way away from it. If I put the 200, it might be like in here. And then you might ask me, and I did have this question a long time ago, why these lines specifically, the 21 or the 20? Because most of the time you'll find in other charts the 20, and you find the 50, and you'll find the 10 moving average. One simple answer for that is because everybody's looking at it. The big guys, the hedge fund, the institutions, they're looking at it. And that's why, and if they're looking at something, I want to look at it too. That's simple. All right. And you can see, and I use volume most of the time. These indicators here, I just added this one, OBV. I don't really depend on it. I'll tell you a little bit about it sometimes. I just added this one recently. I want to see what the stock is doing comparing to the SPY. Is it stronger or is it going lower? So I want to see I want to see actually that the stock have a high relative strength. Okay, better than it means it's the higher it is, it means it's acting way better than the SPY. And I use the volume as for me. Before I jump into the volume, I use moving averages just to find the area of value. I don't want to talk about it. I want to give you an example here. Last trade I've done back in May, LVGO, for example, it was, what is it? I remember it was the 27th. It was this day, that day right in here. So I have them up 21 moving average exponential. All right. I have, so all the technical analysis, they come in one place. I combine them, and down the road you will do that too. Excuse me. So I came in on this day, I looked at the chart, a bunch of stock, they just pushed lower on this day. And the news, I guarantee you, this day everybody was talking about stock rotation. All right, because the Nasdaq tech heavy moved a lot higher, and it was take a break, and then most of the stocks were red during the day, and some of the strong ones, they actually had this type of candle. So the bulls, they pushed the price, the bears, I'm sorry, they pushed the price all the day. They shake out a lot of people in here, and then the bulls, they came in and they fed the stock, and they closed above and the higher, the upper half of this candle. And when I opened it, I looked at it and I said, hold on one second, this is not really a negative thing for me. But this was actually the last 30 minutes of the day. And then it closed, you noticed, above the 21 moving average. And that was a positive sign. A lot of people I know, they got shaken out on this day. And for me, I found this as an entry. Like I said before, I get into sometimes on a breakout, like in here, but I didn't get into this day. Sometimes I get into consolidation. Sometimes I get into a pullback. So this for me was kind of like almost like a perfect picture for me. So I got in right in here on this day. And actually I did follow it, and I took some profit down the road all the way to on the highs here, 120 and something like that. So it was a good trade. So I just want to give you an example where technical analysis, they come together. So it was a 21 moving average, it was the shape of the candle, and it was the stock was on an uptrend. And if you notice, like I said before, you can notice the 8 was above the 21, and then 21 was above the 50. It wasn't on the other way around. So that was an example. And last thing I want to talk about is volume. Volume, it has nothing to do with the price actions. You can use the MACD. I don't use MACD. If you want to know all that stuff, good luck. I'm not going to discourage you or not to encourage you. You can know it. You go ahead and do research. You can know, but I just from my experience and the people that I've seen, they trade better and they've been consistently profitable. They don't use a bunch of those stuff. Even they might have relative strength. They don't have all that. They might have 1 or 2 moving averages, and that's it. That's all they need. To be honest with you, I never really got into moving averages. I mean, the MACD, stochastic, and Bollinger Band and all that. I just, as far as I'm concerned, you just need few of these. Volume, I need volume, because volume has nothing, the way it's calculated, it has nothing to do with the price. These moving averages, they do. They are dependent on the price. If there is no price action, there is no moving averages, all right? And then, but the volume, again, will tell you a different story with that, with the price action. If the stock is moving up and you have this sticks in here, that tells you there's a power. The big guys are getting in here, plus the gaps. So I combine the price action, moving averages, and all that along with volume to tell me where the stock is, what is it doing, what is it heading. And what else I want to discuss? This is it. Well, this 31 minute already. Alright guys, I hope you find this helpful. Give me a like if you like it. Like I said before, we're gonna do more chart analysis. I'm just trying to make these a series. So if I'm trying to help the guy who just came in first time to the market, has no clue what technical analysis is, I just picked these on the top of my head. I don't want to go too deep. I think from my experience, I found only these that helped me the most. I can really delete the OBV. I can delete the relative strength. I can just stay with the 21 and the 50, and I'll still be fine. This video is only for somebody who's just still intermediate, still have questions, and then somebody who just started. So I want to help you guys as much as I can. We'll do more technical analysis of stocks before down the road. I just want to make series, so it will be like one after one. So first I talked about psychology, which is very important for me as far as I'm concerned. You have to know psychology before you just jump into all this stuff. If you don't have your mind set, I mean, I can give you whatever strategy. If I tell you, okay, the stock is moving into a range in here like that, and then one day it just broke out, you'd be like, oh man, this is going up for sure. No, it's not going up for sure, because the next day it can crack on you like that. And I don't want you to be hoping and like, oh no, it's been trading into a range and it's been trending like that, and so it has to continue. It doesn't have to continue. Have that good mindset, be flexible, and then take your stop loss and get out. And that's how you want to be. You want to be a robot. You don't want to follow your emotions and all that. And this is what I want you guys to focus on more than anything else. Get the mindset stable first, and then jump in. Know your candlesticks a little by little. It takes time. It's not easy. I'm here to help, and that's it. That's the truth to trading. So give me a like, subscribe. This is your first time hearing this video, and I hope you guys enjoy it. I hope you find it helpful. More videos are coming, and thank you guys so much.